Hey, what's going on everyone? It's Griffin here, and I hope you're all having a great day as always. Now, in today's video, I wanted to share something a little bit different than usual, but that I believed to be of tremendous value for anyone who wants to invest in real estate. And that is how I managed to turn roughly $45,000 of my own capital into now a market value of roughly around $400,000 worth of equity in my properties that I've purchased, refinanced, and also sold off. So this was all done in less than 2 years, and I wanted to share with you how now this amount is further compounding and as a result gaining more and more momentum for my property investing business. Now, really, the goal of this video is to highlight how you can start with very little actually, as I first did, and then work your way up towards reinvesting your cash flows and your equity back into your property business so you can then buy more properties, renovate them, and then either refinance or sell them to create some gains of capital. And this can be done over time. You can start with very little. Yes, I say I started with 45,000, but in reality, that first property that I started with, we're going to look at this shortly, but I only started with around $11,000, and that's an amount that I think most individuals can manage. So yeah, that's really the whole goal of today's video, to highlight how you can do this over time and you'll gain momentum with your investing. And another main reason why I really wanted to make today's video is because for me, real estate investing has been one of the cornerstone ways that I was able to significantly increase my net worth in a relatively short period of time. Yes, it did take a lot of work, and I'm not going to discount market timing and all that, but pretty much every single time that I make a video speaking about real estate investing, I get a handful of people down in the comments stating that this would never be possible in their market without huge amounts of initial capital, along with a whole bunch of other roadblocks, pretty much just mentally blocking themselves right there. But yeah, so we're going to be looking through every single property that I purchased, what I did to the properties in terms of renovations, rent increases, etc., and then the equity that was created and maybe even capital gains if I sold the property. But what I really want you to take out of this is, yes, what I did for each property, but also the idea that the amount of capital that I first initially put into it is compounding over time. And we're going to look at this further in detail when we go and dive into the spreadsheet. The real beauty with real estate investing though is that you do get to leverage up your capital. And when you first start out and you're an owner occupant, you can use a really low down payment and leverage up your capital 20 times with a 5% down payment in Canada. In the US, you can put even less down, but this is really powerful to give you a head start if you do purchase a property that makes strategic sense and you're able to buy it, do some strategic renovations, and raise that market value on the property. You're going to create an equity spread for you right there that's going to go directly to your net worth. And even though right now the property and real estate market is extremely hot with high price points, bidding wars everywhere, well, I've still managed to find some deals. You just have to really be looking for them. And what's also amazing right now with real estate investing is the low interest rates that you're able to secure on a mortgage loan. My most recent acquisition has a 1.6% mortgage rate. That is insanely low, right? Like my grandparents back in the 80s, for example, buying a house, they were looking at like 18% interest rate, which is just crazy. So right now we're getting a major head start, and this is something that I really believe should be capitalized on. Absolutely, later on down the road, I want to have multiple rental properties that are completely paid off, but for the time being, while I don't have massive amounts of capital to invest with and let's say buy properties cash, well, leverage has been a great tool for me to build equity where I wouldn't have been able to do so otherwise. So with that said, let's jump into the spreadsheet and analyze the 5 properties that I purchased. But before we do that, I want to thank today's video sponsor, which is Skillshare. Skillshare is an online learning community for creative individuals who are looking to broaden their skill set through thousands of classes that are available on the platform, ranging from topics including illustration, photography, design, marketing, web development, and dozens more. Skillshare is a platform that has curated content, so you won't be seeing any ads while you're watching and learning new skills on their platform. Now, I'm sure you all know that for me, being productive is one of my top priorities, but that's extremely difficult with everything I have going on in my life right now. So one class that I recently took, which was really helpful, was called Productivity Today, Managing Attention in the Digital Age. And this was done by Kevin Siskar, the CEO of Finta. One of the notable takeaways that I took from this class was the section on decreasing distractions with tips to stay focused while you're getting your most important tasks out of the way first. first. If you're like me and you're trying to increase your productivity while decreasing the amount of distractions throughout the day, then that is definitely a class that I would recommend checking out. So if you're interested in developing new skills, then I'd highly recommend that you check out the link down in the description to sign up for Skillshare. The first 1,000 of my subscribers to sign up will get a free trial to Skillshare's premium membership. All right, so with that said, let's jump right into the Excel spreadsheet to compare those 5 properties. All right, so here we are in the Excel spreadsheet, and as mentioned, I've listed all 5 of the properties that I acquired over the past 5 years. Property 1 through 5 are rental properties, and then property 6 is actually my house, but it doesn't go as much into the strategy that I'm deploying, although I still listed it here so I could show you what I was doing with it from a strategic standpoint. Now, these properties are also in chronological order from left to right, so we'll start with property number 1 that I purchased in, I think it was late 2018 actually, or maybe it was even 2019. No, it was in 2019 actually. Yeah, it hasn't been that long. So the purchase price of this one, so basically I'm listing purchase price, the down payment, what I put in terms of closing costs, the sub mortgage, and then home insurance, which gets tacked onto the total mortgage if you put less than 20% down. And then all combined would be the total mortgage on the property, along with other information. So depending on if I sold the property, we have information in this section, and then depending on whether or not I'm looking to refinance the property, we have information in this section. So yeah, we'll start with property number 1, which turned out to be pretty much a BRRRR flip deal where I purchased it for $182,000 and only put 5% down. That's really what I'm speaking about in terms of putting a lower amount down when you're first starting out for that opportunity cost, right? Had I waited another maybe even couple of years to put 20% down, who knows where I'd be right now. So this ended up turning out really well. At 5% down, it was just under $10,000. Total mortgage on it essentially was $180,000, which might seem like, okay, well, why would I put any money down to then have a total mortgage which is basically flush with the purchase deal? But like I said, this is really the strategy when you're putting less than 20% down right now, so that then you can work on raising the actual market value of the place, hopefully if you got a strategic deal, and make some profit on it. So I ended up selling this property for $250,000, $248,000 basically, less than a year later, around a year later actually, and I managed to create a capital gain of $72,000. Now, because this was a fixed mortgage though, there was a fee, like a penalty for breaking the mortgage, which was around $9,000. That is definitely something that I learned along the way that I didn't know at the beginning, where if you're looking to either refinance it really quickly or sell it within, less than that 5-year fixed period, if you were to get a fixed mortgage, you're better off getting a variable mortgage rate, because the penalty is only going to be around 3 months worth of the interest payments. So that's a little tip there, by the way. The broker fee was about $7,500, closing costs, and then the total net gain. Now, this is before capital gains taxes, but still, $54,000 essentially was created here on basically a $10,000 investment. And so that deal right there was really my first taste of essentially buying a property under market value, doing some strategic renovations, raising the rent, and then raising the market value of the property. Right down here, I put a section where I have the initial capital put into the properties, 1, 2, 3, 4, 5. So this one was around $10,000, and I turned it to $53,500 roughly. Now, over time, as you have more deals under your belt here, and we'll see how this has impacted my own property business as we go along through the properties, but you essentially create more cash and more equity, which can then be rolled into the next and the next deal to even larger and more lucrative deals. So it's really like a domino effect and an exponential growth pattern that you can apply to your property investing alongside, say, the compounding of your stock market portfolio. All right, so moving on down the properties, the next one, property number 2 here, was also a duplex, and I purchased that one around, I'm pretty sure 6-7 months after the first one. Now I was also able to put 5% down on this one. I'm not going to get into detail as to how that was doable. Just consult with a professional, a mortgage broker essentially, and yeah. So I purchased that one for $280,000, 5% down, so just under 15K, and then the total mortgage, including that mortgage insurance, was $276,000 essentially. The mortgage rate, actually, this is kind of interesting. The mortgage rate was 2.82%, and as you can see, as you go along in the chronological order, you can really see how the lowered underlying interest rates that the Canadian government set was it fully impacted essentially the rates that I was able to secure on these properties. But anyway, so this one, I'm also literally in the process of selling it right now. I'm gonna do a full video on it. However, yeah, I'm selling it for $350. Man, I thought it was gonna get more for it, but anyways, $350. And after everything, yeah, once again here, the mortgage break, that's really unfortunate. But now you know that if you're gonna do this type of strategy, you should get a variable rate. I didn't really know this at the time. So net gain though of $55,600, which again, right? So we're seeing initial capital put in around 15K, and I was able to turn that into around 55,600. That's pretty major, you know. That is like, what is that? That's like a 300 and some percent return in like a year or whatnot. And during that time, there was also cash flow from each one of these properties, which I'm not even taking into account in this calculation. This is literally just from a capital gain standpoint. All right, now the third deal, this is where it's getting really interesting, and where with more experience, I was able to find a better deal and essentially create a lot more equity. And moving forward, it's becoming a lot more of an active than a passive business. But yeah, we're going to be speaking about this quickly right here. So property number 3, this is a fourplex. Actually, it's a fourplex, and I'd actually encourage you to watch the full video that I made on it if you're interested in learning a full breakdown of what ended up happening, how I was able to increase the rent and all that. But purchased it for $350,000. That is honestly insane for what this building was. Down payment, right, 20% on this one, and because it was 20%, well, you don't need to put a mortgage insurance, or there isn't mortgage insurance, I should say, that is included and tacked on to your total mortgage. So the total mortgage was literally just the difference between purchase price and down payment. Now, I have not sold that property. I plan on holding that one for years to come, to be honest, unless something fundamentally changes in the market. But I am planning though on refinancing. So I'm in the process right now of refinancing this property, and based on comparatives in that region of the city, the bank is telling me that it'll be around $475,000. Now, quickly here, the way refinancing works is you're getting a new loan for the new value on your property, paying off your old loan, and then you still need to leave 20% in the property at the 20% of the new value that you refinanced it for. So in this case, that would be $95,000 that you're leaving in the property, right? So 20% of 475. And then the cash out amount is essentially the difference that you're able to withdraw from the property after paying off your old loan, as well as leaving the money in the property. So I'm going to create around just over $100,000 in equity that I'm going to be able to pull out of that property and invest elsewhere. So this right here is what I'm talking about in being able to utilize leverage strategically, not in a reckless consumer spending way, but strategically with a property like this one at a pretty low interest rate, I would say, and you're able to go ahead and create that equity on the deals. Now, obviously, this does take a lot of research. This deal took like over 6 months for me to find, put together, and all that, but I think the payoff is well worth it. All right, so initial capital, property 3. Why am I saying 22,000 here? Oh yes, okay. So basically, here's the deal, right? Yes, I put roughly $70,000 down, but because I sold this property right here. I pretty much just took that money, boom, rolled it right into the next property. So in reality, out of my pocket of the money that I have in my property business, I only put around $22,800 of new capital from my own pocket into purchasing this property, right? So for a new $22,000 put into it, I then went ahead and created around $105,000 in equity. Actually more than that, because I left more equity in the property than what I initially put into it. But yeah, so, refinancing at around $105,000. All right, quickly moving through the two last rental properties here so we can get a move on. So this one right here I purchased and got possession of it around 2 months ago. It is a duplex, and I am planning on adding an extra unit in the basement, which will significantly increase the market value of this place. Now, obviously, that's going to be a pretty expensive job. I'm estimating it's going to be around $65,000. Realistically, it might even be more. It'll probably be $75,000. But I do plan on selling this property after those renovations are done for around $375,000, which in this market right now is definitely not out of the question. I could possibly even get more for a nice triplex like this with a brand new unit, and the two other units are really well maintained. They're awesome. So yeah, the projected gain that I'm looking for this right here is around, just under $100,000 after taking into account the brokerage fees when I go to sell it and the closing cost. You see right here, I don't have a mortgage break fee because this one we have, it is a variable mortgage rate at 1.7%. That's just crazy. All right, now the fifth and last rental property that I am currently in the process of buying. It's not closed yet, but this is a property that basically accepted offer, financing is all approved and stuff. We're just waiting for a couple legal documents to be sent to the notary. So this one is it's a triplex actually. The middle unit though has the full basement as well. So we're gonna cap that off and basically make another unit in the basement to make this a legal fourplex. It's zoned for up to 4 units here. So yeah, purchase this for $380,000. Once again, 20% down, we're looking at $76,000. And sort of like property 3, this is a property that I do plan on holding longer term, and I will be refinancing it though once those renovations are all done. So I'm planning on refinancing it for around $485,000, and then you would need to leave 20%, and the cash out would be around $88,000 on this property. Now, actually though, to be honest, I forgot to put some info. It's going to cost around probably $35,000 to do that new unit. But anyways, the point being, I'll still probably make around $60,000 in new equity that I can roll into deals. And the last thing I want to really point out here is the fact that after deal number 2, right, these two I put 100% capital from my own pocket. Deal number 3, there was a good portion of it, $47,000 worth, that I actually used from the sale of the first property. And then property number 4 and 5, I literally just used that money, the money from the refinancing of property 3, and then the sale of property 2 and refinancing of property 3 to buy property number 5. So you see what I mean about this compound effect and momentum that you're gaining. So yes, at the beginning you have inertia, it's longer, you need to save up for the down payment, but after that, it's really like a domino effect, and it's like a well that keeps pumping. As you keep pumping, the water flows. And so yeah, that's really the main point that I wanted to get across in this video, and hopefully inspire some of you guys who are thinking that, it takes ungodly amounts of capital to start investing in real estate. It definitely is a lot more involved than stock market investing, but as you can see from this spreadsheet, I think it's well worth it. So that pretty much wraps it up for today's video, and I really hope it helped you better understand my overall strategy with property investing and how I plan to further scale up this business over the coming years. Now, even though the market is crazy hot right now and we're seeing property prices skyrocket, the way I see this is you can either do one of two things. You can either continue saving and stacking up your cash to use once there's inevitably a cool down at some point, or you can just double down on your patience, research, and creativity to find deals. I'm telling you, there still are some deals to be had. You just have to be more creative and open-minded about how to find them and structure them, and ultimately just be willing to put in the work. So yeah, I really hope you enjoyed this level of transparency. Honestly, I was debating whether or not I would even share that amount of information with all of you, but realistically, I just want to be really transparent and offer as much value as possible. So if you valued that, make sure to smash the like button. That's all I really ask in return. And if you want to learn more about investing in the stock market as well as real estate investing, make sure to subscribe to the channel and hit the bell button to be notified of new and upcoming content. Also, don't forget to sign up for Skillshare if that interests you. There's a link down below where you can sign up for Skillshare and you'll get a free trial to their premium membership. So with that said, thanks a lot for watching today's video, everyone. I will see you in the next one.